Well, folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey, folks, welcome to the weekly review. What a week. We've been talking about, a retrace can be happening any time. We really didn't have any indications except for some retest regens that were starting to take place on the indexes this past week. But when the water broke, it broke big and everything went down in a fast manner. Bitcoin lost like 20-30% probably in the last 2 weeks. Went from 80, I think it was about 85, all the way down to 61. So if we're looking at this market and we're saying, what happened, and we look at the signals that were there. If you look at the S&P 500, last week, you'd had a test when we first broke out back here about a week and a half ago, and then it drifted up, right, came down, and this was a second test right here, just tested into it. So that was the second test. If you know the probabilities, you know that the second test has about a 45% probability of succeeding. In other words, holding price and then regenerating back to the top side. The third test, you drop down into like the 27% or so. And so in other words, your odds are terrible. And when this one popped back up on Thursday, if you were watching the tape, and I'll show you here in a minute, you could see that there were problems because the tape started selling off immediately Thursday evening after hours. And so that test, as of Friday, looked like it was bound to fail, gap down, and just kept running all the way down. So let me show you here's the after hours using the NDX. You can see here this was, this whole thing with the NDX has been crazy anyway, because you had semiconductors that were just, juiced to the moon over and over and over, one thing after another. And then the final one was Jensen saying, the CEO of NVIDIA saying, hey, I think that, the Marvel Technologies can probably be the next trillion-dollar company. And the very next day, Marvel jumps 30%, just on Jensen's comments, nothing else. And then continues to jump. And, so anyway, Thursday, this thing, the close was here, right? They gap it down. Actually, they open it right down here. They gap it down overnight, or push it down overnight. They gap down on the open. And what do? They just jam it all the way up. And this is typical of what's happened for the past 3, 4, 5 weeks. No matter what, right? This market's going up. And then they push it down right at the end of the day and they close it, right? It's still down on the day. And then what do? They jam it after hours immediately, right, to even a lower low. And that was the tape. You opened up down here the next day and it was nothing but down after that. And the bottom gave out. So, could you see this coming? You could only see that the tests were coming. You didn't know if they were going to fail or succeed. You knew that the failure that took place on the S&P 500 was likely if in fact it came back again. We actually got some signals here that are negative. Like here's the NDX. You shouldn't come back. This is more than 6 bars. Right, you shouldn't come back after 6 bars and say, hey, we're not even going to hold this swing point high the first test. That's a high probability, 90%er. And it didn't, blew it away. And so that's a big negative, right? When you look at this market, that is not a good sign. That says that, something that was expected just didn't happen. And anytime you see something like that, you have to, pay attention. Right, because if something more serious is going on. We knew that from an MTTF perspective, right, the mean time to failure of the trends, that this period was the period where we probably should see these daily charts, right, try to break trend. And to break trend, you have to break a swing point low. And so, a lot of times you'll see it, this is 80th percentile when it gets up there, cumulative. If you're watching these things, many times you'll see them start to roll over right prior to the date, because they're gonna break on those dates, or at least that's stretched when you get there. And when you roll over, it takes a little while to get back to a swing point low. And so that's what we're doing right now. These swing point lows are in position to be broken on a lot of these indexes on the way back down. Now, the one that stands out still, of course, is the SOXX, because that's the one that went crazy to the upside. But even it, and let me go find the SOXX here, even the SOXX is coming back and pushing back into, here it is here, pushing back into this retest region. Now, it's the first test, way more than 6 bars. I'll be very curious to see, does this break on the first test? It's not a wide price spread bar, and we're coming down with some serious volume. So will we break that? If so, again, that's telling us that this market is weaker than we think right now, and certainly weaker than it normally has been of late. One more thing here, rates. Rates are important. 4.5% is kind of the cutoff in my mind. I think if you get above this 468, I think it is, that's a huge problem. We've gone up there, we've tested it, we came back down. Now, notice when we came back down and tested, we did a wide price spread test on the way back down. So in other words, we got way down here below this retest region, that retest region, and into this one and that one. So that was like a serious drop, and then they push it right back up. Now, when I see something like that, it makes me think that, this push up is probably not going to go that far, and it's probably going to try to roll over and come back in here again and test again. We'll see how it behaves. We got some more data. You had the employment numbers on Friday that really pushed this back up again. We've had CPI numbers that have been hot. Well, we've got CPI numbers again this next week, and PPI numbers as well. If those come in hot, I expect you're going to see this thing push higher, and that's going to be a real problem for the market if it does. So in general here, if you look at the market, kind of a closing thought is that, when I look at this market, here we go. The bottom line to me, after 9 weeks, we finally got a big down day. Took away 3 weeks of gains. Not a big deal, really. Probably just temporary weakness. Probably going to see this market bounce back up. I would expect anytime you get a big, fast move down, right, volatility picks up, you almost always get some sort of an immediate bounce. The issue will always be, do you get a lower high? In other words, do you get a failed bounce? You don't get the new highs. If you don't get the new highs, that's a problem. It's certainly on that time frame. We already have a little bit of a problem on that time frame given the way these retest regions got blown away. But that would be the signal that this is going to take longer than just a day or two. Which, up until now, a day or two is all you get. Personally, I've been, I made some small adds to some existing positions. I have a very small book right now. I want to expand that book, but I want to, like usual, I want to see that this is going to have some legs and it's going to hold. I'll probably expand with something like an ETF, broad ETF, keep my position size down so that I can monitor it real closely and don't get like 15 positions or something. And then once I know that things are probably going to go for a while longer, because longer term stuff still looks good, then, I leg back into some other things. But that's the way it looks right now to me. That's the synopsis. Read the report. Have a great one. And I'll see you next time. Take care.